Excited to be here this morning, back for our monthly webinar. It's been a while since we've done these, but getting back to these for 2026. Today, private wealth perspectives, we're going to be talking a little bit about protecting what you own. So the topic of insurance and how that relates to financial planning, wealth management, a lot of the stuff that we do on a day-to-day basis. We're joined here by David Byrne, who is the president of private client services for the Northeast region of Marsh McLennan Agency. David, so excited for you to join us. Thanks for spending time here today.
Yeah, thank you for inviting me, Greg. Really appreciate it.
So why don't we just start in and maybe you can just spend a few minutes talking a little bit about your role in what you do day to day for your clients.
And again, I'm president of our private client services team here for Marsh McLennan in the Northeast region. And we have clients throughout the country and throughout the world. And our job is to structure an insurance portfolio tailored to meet the unique needs of the individuals and families that we work with.
Fantastic. And I'm sure that has evolved since you started there in terms of some of the complexity, some of the things that you have to think about on a day-to-day, month-to-month basis. Really quick, I know a bunch of the folks tuning in know who I am, but I'm Greg Clifford. I run the Clifford Group, which is a independent wealth management firm. We do everything from investment management and financial planning to tax, estate planning, insurance planning, and obviously that's what we're here to discuss today is the insurance piece. So maybe, David, we could start off talking a little bit about maybe some of the areas that you consistently see high net worth families underinsuring, or some of the pitfalls that you see as it relates to your typical client, some of the areas that are often overlooked.
And what we're seeing more and more of, Greg, and it's where we're identifying gaps in coverage, is we're seeing families and individuals, we're seeing their assets increase over time. So they're purchasing additional homes, they're purchasing
Sure.
additional toys, they're purchasing additional vehicles. And where we see gaps in coverage is people using different brokers and not having one quarterback, if you will, be responsible for the entire portfolio. So where we see a gap in coverage is, using an example, we have a family that purchases a home in Maine, and they use a Maine broker, and their umbrella is not notified, and the underlying limit doesn't meet that umbrella threshold.
Sure.
They're forgetting to add a vehicle under their umbrella. They're going to get the insurance on the home, on that vehicle, on that watercraft, but it's not coordinated with the rest of the portfolio, leading to serious gaps in coverage.
That's a really valid point. One of the things we see a lot of our clients, they own real estate in multiple locations or have multiple homes. Is there a particular geographic concern for you nowadays? Is there an area in particular that your antenna might go up and say, hey, we need to be really cognizant of doing XYZ in this particular state or this particular city?
I would say for our clients that have homes in Florida, when they're going to even begin the process of purchasing a home in Florida, wanting to make sure that they're getting wind mitigation report on that home. Without having, if the home is not up to code, it can be uninsurable at times. And trying to be proactive in that part of the process, yeah, I would say geographically speaking, Greg, insurance in Florida, insurance in California, insurance in high wildfire risk states
Sure.
is where my antenna does go up, because we want to make sure we have enough time to speak to our underwriters, to look at the different companies that we represent, to make sure, again, that asset is properly protected on a dwelling basis as well as a liability basis.
Yeah, absolutely. One of the things that we speak a lot to with our clients, and I'm sure you can attest to this, is that not all insurance companies or insurance providers are created equal. And so, unfortunately, we've had scenarios over the last few years, given some of the natural disasters. We've had clients who've had trees go through homes. We've had clients who've, unfortunately, whose homes have burned down, et cetera. Maybe you could speak a little bit about Maybe there's not particular providers that you would want to call attention to, but maybe just speaking to this idea that you need to be mindful of who these carriers and who these providers are.
Absolutely. And at Marsh McLennan, as we're a publicly traded entity, we vet every carrier that we work with from an AM Best rating standpoint as well as from a claims standpoint. Yeah, so a couple of things. So at Marsh McLennan, we have our own in-house claims program, meaning if one of our clients does have that tree that goes through their roof, before they're even on the phone with the company, they're working with our claims team, and our claims team advocates for our clients throughout that entire process. Geez, thinking to what happened in California a few years ago when there were a lot of people that were forced to get insurance from the state fair plan. And then when that cat event happened, people not being made whole for that claim for years.
Right.
And that's something that does keep me up at night because I would never want to have that for a client. And it's the insurance of last resort, but it's not a situation that's getting better. So what we do, what we use a lot, if there's a client in a high cat area, Florida, California, wildfire exposure area, we have a brokerage in London where we're very familiar with the contract, the coverages, and the claims process. So for us, that has been something that a solution that we've been able to provide in those geographically challenged insurance areas.
Sure. That's helpful. Yeah, along those same lines, what we're doing consistently for our clients from a financial planning perspective, there's always that outlier of wanting to protect everything that these families have worked so hard to build. And that's obviously why insurance is such an imperative part of these planning conversations, is because it is that protection piece. And one of the things that we always do is model in to be conservative around a lot of assumptions. To your point, being able to model in complete catastrophe is not something typically that we do. So again, understanding your insurance providers, the types of coverage that you have, where the pitfalls might be, to what you spoke to earlier, I think is essential. One of the other kind of client pockets that we spend a lot of time in are with business owners. So maybe you could speak to how you've seen insurance bespoke solutions for business owners evolve in your time.
For a lot of our business owners do a lot of not-for-profit work and they sit on different boards. And where we see a potential exposure there is these boards you do have coverage. However, say it's a $1 million policy and there's 10 people on that board. That coverage does not go a long way. So what we're able to do is we're able to add on protection for board work on an umbrella policy. And we've seen real life claims examples where this coverage does respond. Other areas that we focus on for our business owners, we're seeing today a lot of wrongful termination suits, and we're able to add coverage for a wrongful termination suit on somebody's personal umbrella. And then what we also do is we want to make sure we review all of our business insurance clients. We review all of their policies to make sure that the personal portfolio and the business insurance is combined and there aren't any gaps in coverage. But we are in such a litigious society, and the amount of nuclear verdicts that we're seeing, having that second set of eyes on the business insurance is something that we do on a daily basis now.
Yeah, there's just so much liability for that cohort, right? I think you have to think about it a little bit differently than, say, a W-2 employee of a large organization. It's a whole different risk profile, if you will. I know we've talked about this, David, in the past in terms of some of our mutual clients, et cetera, but titling has become
Yeah.
such an important aspect of planning, whether it be insurance or estate planning work, et cetera. Maybe you can speak to how important it is to cohesively title things, whether it be on the balance sheet or on the insurance side.
Yeah, and to your point, Greg, we do see clients that are putting their assets in trusts, in LLCs, and estates, and it's done to properly protect those assets. However, when those entities are not listed properly on the underlying personal insurance policies, there's a gap in coverage. So now we have clients that have thoughtfully structured their assets to mitigate liability exposure, but if it doesn't correspond with the personal insurance policies, there's a gap in coverage.
For sure. Yeah, one of the things that we always do whenever we engage with someone from a prospective client standpoint is obviously we're gathering asset and liability statements, et cetera, but we also do like to look at those insurance policies, like you said, just to understand from a titling perspective is has all that legwork, all that work that you've done, to your point, engaging with attorneys and whatnot to be able to title things the right way, has that flowed through to the protection to the insurance side of the equation? Segueing a little bit. So, as we talk about luxury purchases, things like art, aircrafts, boats, things like that, any other luxury asset, what do you think that maybe someone who has never purchased something in those categories before for the first time, if they're to step up and purchase a boat or something like that, what are some things that they should be mindful of?
I would say in over my 20 plus year career in the insurance industry, some of the most horrific claims that I've ever seen surround watercraft. And having clients contact me and when it's their first watercraft purchase, wanting to get a very large vessel, right? And underwriters don't love that because they want to make sure that people have experience for the water.
Right.
A first time purchase, if you want to go out and purchase a 60-foot yacht, that's going to be really hard to insure. And then the other piece that a lot of our clients, when they're first getting on the water, if you will, if they have a crew that's going to assist with that watercraft, making sure that the crew has workers' comp. And then the other piece too, we had a client recently who purchased a watercraft and he was going to have the vessel captained. And working with our client, we went through three or four different captains in terms of reviewing resumes of the captains, making sure that they were
Qualified.
capable
Yeah.
to operate that vessel. So there's a lot of conversation surrounding the water before our clients actually even purchase that asset.
Fantastic. Yeah, I'm sure that at a certain stage that becomes necessary checks and balances, right? For you all being able to provide the insurance, you need to know that, like you said, that there's qualified folks managing these things, whether it's a captain or a pilot or whatnot. But then also from the end consumer standpoint, they want to know, I'm sure they want their own kind of checklist to make sure that they're doing what they need to be able to manage these assets holistically. I'm going to open up Q&A because I do see some questions coming in, David.
Sure.
This first one is for you. David, are there emerging risks to luxury assets like cybersecurity for connected vehicles or digital art that families should start addressing from now?
That's a fantastic question. And yes, so the insurance industry was very slow, in my opinion, to catch up to these new types of exposures. I would say there are very robust products in the marketplace right now. Every company's different, every contract is different, but there are robust contracts available now that would absolutely speak to cybersecurity issues, including digital assets.
Fantastic. Okay.
Yeah.
Did you have something else to add?
Yeah, and again, that side of our industry is constantly evolving, and it's a conversation that is now forefront whenever we meet with somebody.
Sure. The next one, it looks like it's for me. At what level of net worth does insurance complexity meaningfully increase and what changes at that point? It's really nuanced. When we look at balance sheets, I don't think there's a particular asset threshold that we say, hey, now is the time to do more of a comprehensive insurance review. For example's sake, anytime someone has multiple properties, as we spoke to, anytime someone has a business, anytime there's a lot of assets on the balance sheet, or on the flip side, if there's a lot of liabilities, meaning there's potential risk exposure, I would say normally from then we're not just looking at kind of one-off insurance policies, but want to potentially introduce an umbrella or, again, as we spoke to earlier, review what titling looks like. Maybe there's a need for an estate plan alongside the insurance piece. So I don't think there's a particular asset threshold. I think it's more just what sort of variables are at play with the balance sheet and whatever else the family has going on. I don't know if you'd like to add on to that one, David.
And Greg, to your point, in my opinion, the most important insurance product in the marketplace today is an umbrella policy, making sure there's excess liability that properly sits over all underlying assets. And the umbrella insurance is the most competitively priced product available in the market, meaning we're able to get the highest coverage limit for the lowest amount of premium. And again, it's the most important product to properly protect assets, future earnings, and existing lifestyle.
Yeah, you bring up a good point, David. That's the other thing. A lot of this insurance, obviously, they're not all created equal, but a lot of these insurance solutions can be incredibly cost effective, right? If you think about what a typical umbrella policy could look like for a client, you get so much arbitrage out of that in terms of the protection that you're ultimately going to gain from it.
And the other thing too, Greg, with the umbrella, what we like to see, and again, working with successful individuals and families, if they have their policies with different companies, just a real basic example, if they have their auto insurance with a Geico and then their umbrella with Chubb, just as an
Yeah.
example, if that umbrella gets triggered, now you have two different companies trying to defend you, and that's not efficient from a client standpoint at all. So wanting to have that underlying auto with Chubb and the umbrella with Chubb. So if that umbrella is triggered, now you have one company in there defending you on what potentially could be a really horrific event.
Very valid point. We have another one here. What signals tell you that a family's wealth strategy and insurance strategy are out of sync? Why don't you start? I'll go last.
Yeah, so I think it's where what I was just speaking about when we see multiple brokers involved in the portfolio, where we see multiple companies involved in the portfolio and not one person quarterbacking it and overlooking the portfolio.
Yeah.
That's our first sign.
Yeah, I would argue that I would come back to the titling piece that we spoke to earlier, whether it be you have a rental property at a ski resort and the insurance policy isn't listed properly, or you have a Cape House and it's owned in an LLC, but the insurance policies haven't been retitled properly. So I think titling is normally, although an administrative item, an eye-opening one for us to understand really like how granular is the family getting and what level of protection has already been put in place. To David's point, maybe the first insurance policy was from 10 years ago, and there might be other layers that have happened just recently in the last couple of years. So I think titling is a big one as well.
And Greg, not to go down a different road here, but you brought up ski home and a home down the Cape, and making sure if those properties are ever rented out, if there is an Airbnb type of scenario, if there is rental during the summer, making sure that the insurance carrier is aware of that exposure. Because if the home is written as a secondary property, but then we're renting it out 5 times during the summer and there's a claim, an insurance company could deny that claim and walk away.
Yeah, absolutely. Great point. Looks like we have one more for you, David. What are the most common coverage gaps in high value homes that clients assume are already handled?
Yeah, so we really didn't touch on it, but in the high value homes, we work with new clients that think their artwork, their jewelry, their wine collection is automatically covered under a homeowner's contract. And that is not the case. For those collections, if you will, we have to schedule those on a separate policy. So I would say that's the biggest issue that we're seeing, and it's not our client's fault, right? Nobody ever explained that to them,
Right.
that their homeowner's policy is not going to cover the piece of art that they bought last weekend, and that has to be scheduled. I will say with high value homes, where we're seeing more credits than ever in the marketplace. So on our high value homes, the way to save premium, we're seeing generators are a great credit, automatic water shutoffs are a great credit. Finding low temp monitors are a great credit. These credits really were not available in the marketplace 5 years ago. Monitored burglar and fire alarms certainly are a great credit. And the other thing about the high value homes, a lot of the high value companies that we work with, and not to get too granular here, but they offer a waiver of large loss deductible on the policy. So if a claim is $50,000 and higher, your deductible is rolled back to zero. So
Mm.
with that endorsement on the policy, we have a lot of clients with high value homes that elect to self-insure, meaning they'll take a $25,000 deductible, lower the premium, and then understanding if there's a claim that's 50 grand or higher, that deductible gets drawn back to zero.
Great point. That's a great point. Yeah, it's a perfect PSA for people. I think everyone probably knows at this point, right? You're not going to walk into a car dealership and drive off the lot without your car being insured. And I think it should really be thought of the same way in terms of purchasing art and whatnot. You should have an understanding of what the insurance is going to look like for that piece of art or whatever it is that you're purchasing before you walk into the store. And that's where either of us can help out, right? Is get in touch and we can certainly aid in that process. And we see that sometimes, again, whether it's a wine cellar, like you said, or something else that has extreme value over time, being mindful of what the value looks like relative to what the insurance looks like. I think that's a continual evaluation. You need to consistently do that.
And it's a conversation surrounding the art too that we have on a frequent basis. Where is that piece going to be stored? Is there exposure to the sun, to the elements? Is it going to be in a coastal community where you need to make sure flood coverage is going to respond to that? And is the piece going to be loaned to a museum, making sure that the proper insurance is in place?
Absolutely. Absolutely. Okay, I'm going to just ask that if anyone has any final questions, I want to be respectful. I know we wanted to go to 12:30 here. So any last questions, feel free to put them in the chat. We'll get them answered and then we'll wrap up here. This is being recorded, so we'll be able to share this with all of you so you'll be able to refer back to it as well as I'm going to share my screen here. We have a downloadable conversation on protecting what matters most. It's a guide here on the left. And then we have the ability to schedule time with myself, who in extension can also get time with David as well in terms of things that you think that you might need insured or reviewing of your policies. That's all totally within our bailiwick. But I'm gonna share these so you guys have them. I'm just seeing the last questions here. Okay. How do you see wealth management and insurance evolving as clients face increasingly complex balance sheets? I think you spoke to this a little bit earlier, David, in terms of just how much balance sheets have changed and evolved over time. I can definitely speak to that as well. It seems like wealth is getting created a lot earlier. Obviously, we have a transition of wealth that's currently taking place in this country and globally in terms of assets being passed to the next generation. Some of them not liquid, they could be forms of business, real estate, et cetera, et cetera. So I think for us, it's just understanding what the end client objectives are. I think that's really important. And sometimes, especially if it's next generation, they might not know what their objectives are at hand. So it's understanding those things before ultimately prescribing whether it be on the insurance side or on the investment management side, prescribing solutions preemptively So yeah, I think from a wealth management and insurance standpoint, I think they both are highly bespoke and they're determined that the outcomes needed are determined by, what it is we're trying to solve for. So that's something that I've seen. I don't know about you, David.
Yeah, I completely agree with that, Greg. Very similar approach from us as well. And I think one thing that you did mention as the balance sheets are evolving is really understanding what the client's intention is, what they want to solve for, and putting together that holistic program to properly protect the assets and making sure the insurance portfolio is working for them properly.
Absolutely. David, this has been fantastic. Thank you. Thanks again, David Byrne, President of Private Client Services, Northeast Region for Marsh McLennan. We appreciate your time. We appreciate the help that you offer our clients as well. And thank you all for those who tuned in, and we'll be circulating the recording.
Thanks, Greg.
Thanks, guys. Have a great day.
You too.